Why timely accounting is critical. Hi, I'm Josh Horn with Horn Valuation. I help business owners and attorneys with business valuation and building business value. So why does this matter? Getting your accounting timely, getting it out there, looking at it current, correct. Why does this matter? Well, how are you making your pricing decisions now? How are you deciding how much inventory to carry now? How are you deciding if you have too many or not enough personnel right now? How are you deciding if your sales are growing or shrinking now? These are huge decisions, and you need to be able to make these with good current information. And at the highest level, what you should be doing is actually looking down the road, not just looking at the past. So this is very important. I'm going to show you a quick little graph about where I think most businesses are in this and why I think you can put yourself in an elite category of those that don't do this and operate at the highest levels. This is a little chart I put together. It's not scientific. It's based on my experience of where I think companies land on getting their accounting done timely, getting it done on time so that they can make decisions and eventually operate at that highest level where they're actually looking down the road instead of looking at the past. So you'll see from the graph that I'm basically saying that over 90% of companies are actually behind. That is, they either have no books or they're in some state of being behind. And I'm even willing to give you a one-day lag. For most companies, a one-day lag on sales data or something to that effect is to be expected. But if I walked into your business right now and said, show me your balance sheet, show me your income statement, show me your cash flow statement, would it be a day behind or even on time? And I think most of the time, I think 90% of companies, including a lot of companies that get financial statement audits, including several $100 million companies, they're not able to do that. It's a high standard I'm holding you to here. I would say probably about 5% of companies can do that. That they're just current. Okay, they're current. They can run that information, run that financial statement, hand it to you right there, and at least it'll be a day stale at best. At the highest level, we're talking 3% slice of the pie. They are up there. They are looking ahead. And what I mean by this is they are using a lot of predictive scorecards, even some analytics in some cases. They're thinking about what inventory they're going to maintain 2 months, 3 months, 6 months down the line. They have enough information from their sales pipeline. They're able to start to predict what are sales going to look like 1 month, 2 month, 3 month, 4 month, on and on. They've got a budget that outlines at least the year. Now, I think in some cases you can get carried away with this because the business changes, but you certainly don't want to get behind so far that you can't make decisions. Now, in this last little clip, I'm going to tell you how to get to this point, some little things you can do today to get you to the point where your accounting is timely so you can start to move into that elite level. So how can you move into the elite level, the 3%, and beat most, if not all, of your peers in your industry? I believe you can do this, and there are some simple steps you can take. First off, eliminate anything in your accounting process that is adding no value. A lot of times it helps to get an outside perspective to do this, and that's one of the things I would recommend, getting a fresh set of eyes on this in the beginning. So you get a fresh set of eyes on it. You eliminate the processes that are adding no value. Maybe there's some entries that you're doing that are reclassification that nobody's even looking at them. Maybe there's some step that has always been there that you start asking around and you find out that, well, I don't even know why we do that anymore. So eliminate all of the garbage that's adding no value. Secondly, automate. To the extent you can automate any processes that are very manual. A lot of companies are still running old-fashioned checks. And hey, I've been guilty of this too. I still see this a lot, but there are other ways to pay people now, and there are ways to do it that can cut the time as well as the paper expense and the manual running around with checks. How about on the receipt side, the accounts receivable side, the payments in? Maybe you can get more of your customers to pay you electronically as opposed to by check. So you're getting them to do that piece of the work. All kinds of things like that. Automate, automate, automate. In some cases, it may make sense to take a piece of your accounting function and have an outside company do that. It may be cheaper. It may be faster. It may be more accurate. Delegate. Delegate it out. Delegate it around the company. A lot of times I see a single point of failure problem. And so, in a lot of small businesses, this is a difficult thing to solve because they don't have a huge budget. But to the extent you can do some cross-training so that your key accounting person can at least take a couple of days off or hopefully a vacation, this is critical so that the whole accounting system doesn't come to a grinding halt. These are some of the ways you can get your accounting timely, and not just timely, but looking ahead down the road so you can be in that elite crew of companies. They're adjusting and they're building business value. This is Josh Horn, CPA of Horn Valuation. Have a great day. Bye.